Hello, everybody. Jeff Koppel, Realtor General Contractor. Today, I'm going to come to you as a realtor. I recently just did a presentation to my brokerage about seller finance, and it was kind of an eye opener for me because I didn't understand what most realtors' perception of seller finance is. Some of the things that came up in that presentation were people thought seller finance always included things like balloon payments, amortization schedules, save maybe for 30 years, but pay off due in five, interest only type payments, um, you know, pay prepayment penalties if you pay off the loan too soon. So I thought what I would do is just kind of walk through some of the paperwork involved in a seller finance and kind of present the seller finance that me and most of my investors offer. The kind of financing that my investors offer is really almost identical to a conventional third party loan. And so what I thought I would do is take a look at how you actually would fill out the paperwork here in Texas for a seller finance my particular investor is offering right now in one of our homes in Denton, Texas. So let's go ahead and take a look at some screens that I've got laid out here. Let's start with the 1-4 contract first. This is standard TREC 1-4 contract. It's a promulgated form, designed by real estate attorneys here in the state of Texas, and it's promulgated by the Texas Real Estate Commission. So this is just a standard 1-4 that you would see on any buyer offer on a piece of property. In this case, with a house on it. And so the numbers that we're going to be dealing with here for the seller finance is similar to what you would deal with on the third party financing addendum. So it's going to be items here in item 3B. So if you look at the sales price information, basically line A is your down payment amount, line B is the amount that you're going to be financing, and then line C is the total amount of the purchase price. So most of the time, realtors, when they're going to be submitting an offer for a buyer, they're going to be checking this box here, third party financing addendum. In this case, what my seller is offering is seller financing. So in this case, the buyer's agent would select this box right here, the seller financing addendum box. So, okay, so that's the TREC 1-4 contract. Now let's take a look over at the seller financing addendum. Now, on the seller financing addendum, there's some stuff here that is not included in the third party financing, but I can show you the similarities between the two. So in item A here, this is what my seller is going to require, the information he's going to require about the buyer. So in other words, to try to establish credit worthiness, he's going to be asking, in this case, he's going to be asking for the seller to supply this information to him within 10 days, which we work with an independent RMLO, or residential mortgage loan originator. All banks have them. This particular RMLO is just independent of any of the, Chase Bank, Bank of America, or that. And she specializes in investor type loans. So that's why we use her. And the reason we use her is so that the loan stays in compliance with Dodd-Frank regulations, TILA, RESPA, all the different government regulations that surround consumer credit protection. So that's why we use an RMLO. So in this particular case, my investor is looking for a credit report, verification of employment, and verification of funds on deposit at a bank. That's the information that he's looking for from the buyer. So, and then down here, item C is probably the one item that scares buyer's agents the most. This and combination of item 2C. But item C probably scares everybody. So basically the promissory note information, this is basically just line B from the 1-4. It's this information right here, the amount financed. So that's the information that you would put right here. And then this interest rate is the desired interest rate that the buyer is looking for. And then in handshake with that information, My seller is offering monthly payments, and he's offering a long-term, 360 months or 30-year mortgage. So, and the first payment on this particular loan wouldn't start till 30 days after the date that the note's created. So 30 days after closing would be the first payment. So what he's looking for is principal and interest payment. So this probably makes buyer's agents the most nervous, because I know feedback I've had from agents is, well, where do I calculate this? You don't necessarily need an amortization calculator to calculate this. And I know a lot of people, a lot of buyer's agents are worried about liability of this number being correct. Okay, let's take a look at the third-party financing addendum. Okay, if you look at, in comparison, what a seller financing addendum is the most similar to is conventional financing. This first item right here on the third party. So if you see on the conventional financing, most of the time, actually, in every occasion, you're going to be selecting item 1 here. It's a first mortgage loan. That's exactly what we're doing here. This is a first mortgage loan that this seller is offering. And here you put in the principal amount of the loan, which would be, again, from line 3B on the TREC 1 to 4. And then you're also, putting here the amount of time, the length of loan that you're looking for. In this case, they're asking for time period in years. So here you would put 30 years for a 30-year loan with interest rate not to exceed. Okay, you would put whatever desired interest rate the buyer wants. And for the first year, or basically in this case, we're going to say they want that for the whole 30 years of the loan. So they would put 30 here again. And then the buyer's loan estimate, for the expenses, not to exceed X% for the loan. Okay, now that's the one item that's missing from the seller financing addendum, is there's nowhere on here to put, the maximum amount of expenses associated with the loan. But that's one reason we use the RMLO, because she is going to provide all that information as part of the loan packet that she creates for the seller. So that's going to be included in that. Now, if we go on down on the deed of trust information here for the seller finance, I'm sure you all have heard acceleration clause in a mortgage. Well, that's what this deals with. And basically, an acceleration clause on a mortgage is if, say, the buyer of this property goes and resells the property without paying off this loan, what's going to happen? What's the expectation? So in the seller finance, it basically gives you two different choices. This line 1A here says that if you were to resell a property and not pay off this underlying loan, you're not under any obligation to tell the seller that you did that. Well, in this case, my seller is wanting to be involved in that process. He's not necessarily saying that you can't resell without paying him off, but he wants to be able to approve it. Same goes for a lease that's longer than 3 years. He wants to be able to oversee that. And so additional information here, my seller wants the buyer to maintain casualty insurance. This is a standard deal with most conventional loan programs now as well. Most banks will want you to escrow, insurance and taxes. And again, my seller is also asking for, taxes to be escrowed. Now, another thing that my seller does that is not shown here is this particular seller also uses a servicing company. So just like a bank, if you went to Bank of America and you got your loan through Bank of America, typically Bank of America will hold on to the servicing of that loan as well. They'll sell the note right away to an investor, but they will hang on to the servicing contract for that note. So my particular brand of seller financing is not what you would typically see of seller financing. The items that you typically see under seller financing, the balloon payments, the mortgage due in X number of months in full. I would really kind of refer to those as interim financing or bridge loans. I don't see that as a long-term financing option for a buyer. So anyway, I hope that kind of explains a little bit about my particular flavor of seller financing that me and my investors tend to work with. And, I hope that clears up some of the ambiguity out there about seller financing. I'm going to do a follow-up video to this of a wrap mortgage, which is definitely probably what buyers agents are more used to hearing about. And I'm going to explain the kind of intricacies of that as well. So anyway, again, I'm looking for ideas for future videos. And if you have ideas, please send them to jeffkoppel@gmail.com. You can see my link down there. And if you like the content here, please subscribe because I'm putting new content out all the time. So thanks for your time and hope you got some useful information today. Thanks.